I have to be direct. If you're not prepared, these next few months are either going to make or cost you a significant amount of money.
We're facing not only an ongoing government shutdown and global turmoil, but a potential $37 trillion financial reset.
And just now, after months of nonstop profits, we've witnessed the worst single-day stock market drop since the April sell-off.
This was accompanied by the largest one-day cryptocurrency liquidation event ever recorded.
All of this chaos traces back to one word that sends chills down every investor's spine: China.
That's right. Despite the news telling you everything is fine, rest assured there is a lot more going on behind the scenes than most people realize.
So, during a time when stocks have reached some of their most expensive valuations on record, let's discuss what is truly happening.
We'll cover what this means for you, the impact it's about to have, and finally, how you can use this information to come out ahead. Okay, Andrew. I won't sugarcoat it. This might be a very difficult next few months. But the more you understand, the better prepared you'll be to navigate it. And before we dive in, if you appreciate this type of timely analysis, hitting the like button and subscribing helps this channel tremendously. All right, let's begin with the central issue: China.
As you know, our economic relationship with China is complicated. We rely on them for low-priced goods.
And in turn, China relies on us buying those goods to keep their economy afloat. But there's a huge problem. We have what's called a trade deficit. We buy far more from them than they buy from us.
And that imbalance is seen by many as a structural risk to American manufacturing, economic strength, and national security.
In response, China retaliated with their own tariffs.
We responded by issuing even higher tariffs. And before you knew it, we had one of the most severe stock market drops since the Great Depression. Thankfully, a temporary agreement was reached. The market soared back, and many believed the trade issues were behind us, until recently.
On Thursday, October 9th, China announced they would be implementing export controls on rare earth minerals.
These are critical components used in almost everything we use on a daily basis.
And wouldn't you know it, 90% of those rare earth minerals are all processed in China.
Now, China's ministry says this is due to their dual use for civilian and military applications, and that such controls are an international practice.
Although, let's be realistic, this is likely a negotiation tactic.
It's a chess move.
And now, the markets are up, as if this never even happened. This makes it very clear that all it takes is one tweet to disrupt the global economy. And as a result, we saw a significant stock market sell-off.
Now, when it comes to the stock market, it's crucial to remember that up until this point, we've seen one of the strongest six-month rallies in history.
From my perspective, the market was climbing so much that investors were becoming nervous about whether these gains were sustainable. For example, last week, search volume for the term AI bubble broke a new record. Investors believed the economy was on borrowed time.
Billionaire Paul Tudor Jones even said this is reminiscent of what happened right before the 2001 dot-com crash.
On top of that, credit scores were dropping at the fastest pace since the Great Recession, and private credit was drying up.
Even anecdotally, I've seen many investors pulling back, keeping cash on the sidelines, and piling up dry powder for a potential market sell-off.
Just consider that tech now makes up more of the S&P 500 than at the peak of the dot-com bubble. And the Buffett indicator just recently hit its highest level ever, implying this is one of the most expensive stock markets in history.
I say all this because, from my observation, the market appeared to be on borrowed time, just waiting for a reason to begin selling off.
And this trade war escalation was the catalyst that caused people to hit the eject button.
However, in terms of what got hit the hardest, we have to talk about cryptocurrency.
Believe it or not, in less than 30 minutes, we saw the largest single-day liquidation in history. Bitcoin saw its first ever $20,000 red candlestick, and leveraged traders lost their fortunes almost instantly.
Meaning you could put down $1 and control $100 worth of the underlying investment.
And to put it simply, if your investment moves up by 1%, you've doubled your money. But if it moves down by 1%, you are completely wiped out. That's speculated that a large part of the market was propped up by these trades. So when the market fell, they were
causing the price to fall further, forcing even more liquidations, until many people were wiped out completely.
Now, thankfully, despite all this chaos, Bitcoin is still trading at the same level it was a month ago. The same is true for the stock market.
We've only really lost about a month's worth of gains. And yes, seeing that disappear in an hour is severe.
But not all hope is lost, because there is an opportunity to profit massively from what's about to happen. Although, before we go into that, I get it. Watching the market swing like this is tough.
Moments like this remind me that when things get chaotic, we shift all our focus to money and forget that we make our best decisions when we're level-headed.
When your routine falls apart, everything else follows. You make bad financial decisions not because the market moved, but because you weren't at your best. That's why removing even one piece of daily stress can make a huge difference. It's why I appreciate our sponsor, Cook Unity. Cook Unity delivers restaurant-quality, pre-packaged meals straight to your door. The quality is exceptional for the price. There's no grocery shopping, no meal prep, no cleanup. Just heat it up, and it's ready in minutes. If you want to save time and get back into a healthy routine, I highly recommend them. Use the link and code on screen for 50% off your first order. My thanks to them for their support. Now, let's get back to how you can navigate this market. All right, in terms of what you can do over these next few weeks or months, here's my entire philosophy. First, there will always be a reason not to invest.
When I first started in real estate in 2011, the market had fallen 50%, and people said it was a terrible time to buy.
Thankfully, I didn't listen, and those properties are now worth 4 times what I paid.
The same thing happened in 2017 with the S&P 500, in 2020 during the crash, and in 2022.
It shouldn't be exciting, where you're posting screenshots of your weekly gains. That's not normal.
The line has become far too blurred between investing, which is calculated risk, and pure gambling.
Third, overconfidence will destroy your portfolio. It's important to recognize that the less you think you know, the better you will often do, because you won't overcomplicate things.
Study after study shows the best investors simply buy a broad index fund and hold it for decades. It's that simple.
But very few people do it because it's boring. Trust me, most who take unnecessary risks will look back and wish they had kept it simple. Fourth, an actual market drop will probably be much worse than you expect.
You know the feeling? You see a 1% decline and buy and thinking it's a great deal. Then it drops further, so you buy more until you're out of cash.
And then
it keeps falling even more.
Generally, the market bottom takes place at absolute investor capitulation, when everyone thinks the market is doomed forever. That is usually the best time to buy.
Every investor will have their "this time is different" moment. But usually, the longer you hang on, the better the long-term outcome.
And what we've seen so far is barely a drop in the bucket compared with actual market crashes. This is nothing to be worried about yet.
Next, fifth. Good financial habits should be practiced in both up and down markets.
It's not the cool thing to do, but diligent savings and living below your means will save you 10 times over in times like this.
I've always prioritized conservative investing and frugality, because nothing lasts forever.
I've just seen too many careers, businesses, and investors go belly up to think that it can't happen to me.
As a result, I tend to be cautious. It might not always be the most optimal, but it helps me sleep at night, knowing that everything will be okay.
And number 6, it was found that half of the S&P 500's strongest days in the last 20 years occurred during a bear market.
This is critical. If you had missed just the top 10 best trading days over the last 5 years, your return would...
This is why trying to time the market is so dangerous. The best days often come right after the worst.
Looking at the data, since 1920, the S&P 500 has seen an average of 5% drops every single year. This is normal. In fact, since the 1940s, we've seen almost 50 stock market corrections of at least 10%. That's one every 20 months or so.
Separate from that, it's also important to realize that when you look at average stock market returns, you rarely ever get the average.
Usually, it's more common that you either make or lose a ton of money in a given year.
For instance, one analysis points out the market has only returned between 8 and 12% a year, 5 times since 1926. That's it.
We're at a point where an average return is just as likely as the market going up by 40%.
It's more common to see double-digit gains or losses than a return close to the long-term average. That's why your time frame must be in decades. So, in terms of what's happening today, to me, it's just white noise. Even though I enjoy analyzing the market, it doesn't actually impact how I invest my money. And while I do have some concerns about recent valuations, it's not changing my core investment philosophy.
You know the saying, the stock market can remain irrational longer than you can remain solvent. That is exactly the case here.
The market could continue moving much higher before it eventually corrects. I am not in the business of trying to time it.
I enjoyed one analysis that broke down the negotiation strategy perfectly. Make cryptic posts, announce a large tariff near the weekend. Money pours in to buy the dip, the situation de-escalates over the weekend, a solution is announced, and we recover. Rinse and repeat. Or, if you want something more intense, there's the theory of a $37 trillion debt reset plan using gold and cryptocurrency.
The point is, anything can happen at any time with no warning whatsoever.
I'm keeping a little extra cash on the sidelines, just in case we see a drop and a good buying opportunity comes up.
And of course, I'm hitting the like button and subscribing for more content like this. I recommend you do too. That's been Thank you for watching. Thank you so much for watching. Until next time.